The Singapore tech stocks have still seen weakness in the past 1 month, right, due to ongoing talks about interest rate hikes that will be pretty much happening in March 2022, right, about a week's time. And of course, we have seen weakness in the general market as well due to Russia's invasion of Ukraine. And I think that the only sector that was performing would be the oil and gas sector, whereby you have seen strength over the past 2 weeks, right. So yeah, tech stocks have still sold off, right, along with other banking stocks as well. Right, so how are the Singapore tech stocks doing, right? So in this video, we'll be covering on the 4 most popular Singapore tech stocks that I get asked quite often, and they are AEM, Frencken, UMS, and ISDN, right? So these are pretty much the 4 stocks which a lot of people ask me on, and some you guys may still be holding on to it, or maybe you are thinking to get in on dips at a discount, or maybe you are you want to think about getting out because there are some signs of a downtrend, or there's some bearish signals and all that, right? So in this video, we'll be looking at these 4 stocks. We'll even look at the system to see what it says after doing a quick analysis on the chart in terms of the support, the resistance level, where we are right now, and yeah, we look at the system to see what it says and if there are any like bullish or maybe even bearish signals that have came out over the past few weeks. Right, so let's dive into these 4 stocks right now. Okay, so the first stock I would like to talk about would be this company called AEM, right? One of the leaders in the Singapore tech sector, and of course we have seen weakness over the past 2-3 months as well, since like December, when it kind of broke the $5 support level right here. So when we broke the $5 support level, not so good in terms of some short-term downside happening. So it went all the way down from $5 to around that 430, a bit of support, but that broke as well, right? So this 430 I mentioned in the previous video as well, it was a really good resistance level whereby we broke up somewhere in November and the upside really started. So this was kind of like a little bit of support, but it seems like we have broken down the $4.30 level as well. Alright, so 430 broke down, and now we are pretty much back to the next support level, and that would be quite key as well. And in fact, over the past 2 weeks, we are seeing some bargain hunting or some buying pressure coming back there, and that would be that $3.90 level. Look at this, right? So since like somewhere in July, about more than 7 months back, we have rebounded from here, 1, 2, 3, and yeah, now we are nearing it again, and you can see it become rebounded over the past few days from $3.90 all the way to around that $4.30 level. So that is pretty much the range for now for this company called AEM. $3.90 full to about $4.30, so like a 40 cents range. So I would say that in terms of the downside in the short term, we might still be a little bit weak, all right, a little bit like weaker, all right, below this $4.30 level. Look at this, right? This is where the 20 days moving average line is. So as long as you stay below, not so good, that's where selling can actually come back again. But the key here is we're going to wait for some really good bullish price actions above the 430, 435, and that's where the recovery can actually happen in terms of the reversal back towards the $5 or 450 level. That could be the next upside. If not, it's pretty much back to this range. In the short term, we might actually see some consolidation. In terms of the long term, there are some signs of, the uptrend still looking good. Because the red and the blue line, they're still pointing up. Red line above the blue line as well. So longer term trend, it still looks okay for now. We're just a little bit of sideways consolidation, but short term, just take note, we want to definitely get past that 430 to 435 to see some good reversal coming back. Alright, so let's take a look at the system to see what it says, if we have any signals coming out over the past few weeks. Okay, so let's take a look at the system I call 1GT, one good trend, whereby kind of like guides us on counters like this and alerts us and when to get in and when to get out, right? So this is AEM right here, and somewhere around like October 2021, we actually had quite a good bullish signal right here, somewhere around the $4, 410. It went up, we got another bullish signal, and that's where I mentioned we broke that 430, 420, and went all the way up to like $5, and that was where we had saw some consolidation, right? But over the past few weeks, since like January or maybe like past 1 month plus, right, we have seen like a bearish signal coming. You can see we kind of broke that support line, and we have seen like a bearish signal started to hit down. We got to exit and started to hit down a little bit more, right? So this is where we are right now, somewhere around the 420, near that 430 marks I mentioned. At 430, 435, this is where the red dotted line is. As you consolidate, it might hit a little bit lower, but I think somewhere around the 430, 435, that's where some selling can actually come back again. So if we can break break above that resistance, this red dotted line, then that can be a good thing in terms of more upside and a reversal back up. But right now you can see that we might actually see a little bit of weakness, right, as it consolidates from that 390 to maybe that 430 levels as I talk about, right? And the trend bar has kind of like turned a little bit down. You can see it was like green all the while, and now it's like red in color. So yes, I think we want to wait for a little bit more stability. Hopefully the 390 holds, all right, and we want to wait for it to break that 430 to kind of like time our entry to kind of get in to write any reversal. Okay, next stock would be Frencken, right? One of those popular tech stocks as well, whereby we've seen quite a huge rally in 2021, right? But somewhere around like November, December, there were some signs of weakness already, right? As we broke this key support level around the $2.10 mark, we kind of broke that level, and there's some selling actually happened, all right? And the downtrend kind of like started to form up, all right? And we kind of like headed lower, consolidated, and we broke that 180 support level as well, right? So this is where we are right now, about $1.54. I would say that the trend might actually be down for Frencken. Look at this, right? The 20 days moving average has pointed down, all right, and has crossed below the red line and the blue line. Look at this, right? The red line, 100 days moving average, has also crossed down below the blue line. So there are some signs of the trend turning down in terms of the mid to long term as well. So I think definitely want to be careful with Frencken, because anything below this new support turn resistance level at about $1.70, right, we can actually see some weakness, or the trend might actually still be down, right? So that is pretty much the downside for Frencken right here as we approach towards the 160 to 170. That's where selling can actually come back all the way down to maybe about the 135 to 140. I think that is where some bargain hunting might come back again. Right, so this is Frencken. I think that you want to be careful, but right, you don't want to hold on to stocks like this in a downtrend, because if the support levels break down, like what we see, we broke the 210, the $2, and the 180, and it just keeps going down. Right, so until we see some signs of a clear reversal, like maybe a good reversal candle, or with it trying to form higher highs, or maybe with it breaking back above the 170 to 180 level, then we can think about getting in, or maybe positioning ourselves to write any reversal. But right now you can see that the trend is down. All right, each time we hit to like the 160 or maybe the 170, sellers are coming back to push it down, all right, and we are like seeing lower highs. So in fact, we can draw what we call a downward sloping channel resistance line right here. You can see it's like pretty much lower highs, all right, and as long as we stay below these channel resistance lines, not a good thing. Selling can actually come back. Right, so let's take a look at the system to see what it says if we have had any bearish signals coming out over the past few weeks. So this is Frencken here on my 1GT system, all right, whereby we have like bullish or maybe even bearish signals that guides us on entry and exit. All right, so it was one of those really good stocks in 2021, right? Since like April, March 2021, we had a couple of really good like bullish signal. In March it went up, in May we went up a little bit, all right, and somewhere in June there was quite a good move from like about like 180 to about like 220, right? So that was quite a good move in 2021, and I say right somewhere around October, November 2021, and of course when it talks about rate highs and all that, most of the tech stocks got hit, and you can see that that's where some bearish signals started to come back right here, somewhere around 26th of November. You can see we broke this like green dotted support line, all right, started to head down, all right, got an exit. A new bearish signal came out in January this year, all right, went down, and most recently right here, right, somewhere on the 7th of Feb, right, so rebounded. You can see 7th Feb just last month, all right, we got a new bearish, it's a red arrow pointing down, so there's a bearish signal coming out again, and you can see it started to head down, and this is where we are right now. So there are no kind of like exits on this bearish signal, so just want to be careful. I mean, as I say, there could still be potentially more weakness, especially if we were to stay below this red dotted resistance line. You can see somewhere around that 178, all right, it might actually push lower depending on how low it goes, right? So we have this red dotted resistance line that trails prices as it hits lower, something like a resistance level. So as prices hits lower, it follows through, and only if we were to break that level, then perhaps there could be some signs of a reversal. If not, if we continue to stay below this red dotted resistance level, which it might go to like about 170, now it's somewhere around 178, but it might go to 170. If we stay below this level, all right, it can still be weak, right? The downtrend can still happen, and especially if we do to break this support line as well. So you can see we kind of like attempted to break that 150, all right, 150 support level. If that happens, if we really clear and break down the 150 support and stay below 150, not a good thing. That's where more selling can actually happen, maybe towards the 135 to 140. All right, so this is Frencken. We got a bearish signal recently. There are still no exits on it. So guys, if you like this video, go ahead to give me an early thumbs up. It will definitely help out the channel. And thank you so much for doing this, right? So let's move on to the third Singapore tech stock I would like to share with you, and that would be UMS, right? Also one of those popular tech stocks that I get asked quite often. All right, and we have seen quite a good move in 2021, very strong uptrend. But as I say, somewhere around like December, January, there were some signs of weakness in terms of the short term, right? So this is UMS. You can see we were holding quite well above this 140 support level, but it seems like we have broken this support level somewhere in January, 18th of Jan. We went down and we were back to this next critical support level. So 140 and then the 120. Look at this, 120 was a really good resistance, turn support. We rebounded from it once, and also we're actually holding, since like January all the way to February until like March, we're holding above the 120, right? But it seems like we have broken down over the past few days as well. We broke this 120, so not a good thing. We can actually see more weakness down towards the next support level, maybe towards the $1. So over the past few days, it seems like buyers are starting to come back near the $1 level right here. That would be a psychological level. I think this level is key, right? $1 is a psychological level. If we do kind of like hit to there, I think hopefully buyers can come back again and we see some good bargain hunting actually coming back, right? But just want to be careful, because if that $1 were to break down, then not a good thing. We won't probably see some stability there, some good bullish reversal candlesticks there. That's where you can time your entry to kind of like get in to catch any potential rebound, right? But right now you can see that 120, right? 120 is a resistance. We might actually see a little bit of rebound from here. All right, let me just go to draw it for you. So I'm actually consolidate here. It might go up, and then selling might start to come back again. We might hit to that $1 and see a rebound. So the thing here is we want to wait for a good, bullish candles near the $1, right? We don't want to just second guess, because there are some signs of the downtrend just starting to happen in terms of the mid to long term, right? So look at this, right? The 100 days moving average, the red line you can see is pointing down right now. So if you continue consolidating below the 120, it might actually go down, and it might cross below the blue line. So that's not a good thing in terms of the downtrend happening or taking place in the mid to long term. Then we want to be careful, and especially if that $1 were to break down. Right, so this is UMS. So hopefully we can break back above this 120. All right, this 120, as I say, would be key. We might consolidate here, and eventually we'll break that 120 level. That could be a good sign of any reversal starting to happen. So we want to see it forming what we call higher highs, right? Trying to get back above that immediate resistance level. In this case, that would be 120. Then that can be a good thing that buyers are prepared for that reversal. Alright, so let's take a look at the system to see what it says. Okay, UMS on my 1GT system right here, since like July, I would say June, we had some really good move, bullish signals. It went up, as I say, it went up to about that 150 level, and that was where there was some signs of weakness coming in, somewhere around like January or like December. It started to consolidate due to talks about interest rate hikes. And you can see eventually we broke this level. This is like a support line, the green dotted support line. You can see when we broke this level, that's where we had like the first bearish signal coming out somewhere on 19th of Jan. So that's not a good sign, because as we break certain key support, all right, that's where selling can actually happen. All right, so it went down, we got to exit, and this is where we had another bearish signal coming out on the 22nd of Feb. Right here you can see just right at the blue, this green dotted support line, right here. So it seems like we have broken down the support line, and the trend bar has turned from like green to red. So a bit of a downtrend, as I mentioned. So just want to be careful, right? Normally we want to wait to see some stability, perhaps an exit, and then even like a new bullish signal coming out. That's where we get time our entry to get in, right? So for UMS, all right, it might still look a little bit weak. All right, we have a bearish signal coming out, and there are still no exits as of now. Okay, next counter, ISDN, right? And we are trading at about 0.59560 right here. You can see that we have seen weakness over the past few weeks as well, as the market started to weaken. We kind of broke down this like 65 support level. We broke that 60 cents, and we are back in this consolidation range from that 55 cents to that 60 cents level. Look at this, right? We have been holding above these like 55 to 60, I would say, for more than a year already, since the beginning of 2021. We have rebounded like about 1, 2, 3. We neared it, right here, rebounded from it. So yeah, we are pretty much back to this range from 55 to that 60 cents level, right? So that would be like kind of like the consolidation for now, 55 to 60 cents. Hopefully we just hang and hold above this 55. If not, not a good thing, right? If we break that 55, that's where some selling can actually happen. We might push down towards that 50 to maybe even the 45 cents level. So just want to be careful because there are some signs of weakness as well in terms of the trend turning down. Look at this, right? The red line has kind of like crossed below the blue line, all right, and they're starting to point down. So short term, we are down already when we broke that 65 cents, but longer term, there are some signs of it pointing down as well. So just want to be careful, especially if 55 cents, 0.55 were to break down. Probably want to have a plan to get out or reduce some exposure because that's where more selling can actually happen. All right, so this is ISDN right here. Hopefully, all right, hopefully we consolidate here from 55 to 60, and we want to see what we call higher highs, all right, back above 60 cents. That's where we can potentially see a reversal. All right, so this is ISDN. Let's take a look at the system to see if there are any signals. Okay, so this ISDN right here, I'll not go too far, but I think somewhere around 18th of Feb, all right, it seems like we had a bearish signal. It's like a green arrow pointing down, all right, and we were like consolidating above that 65 cent support level as mentioned. So we kind of like broke this level. You can see we started to hit down from 65 to about 595 now, all right, and the bar has kind of like turned from green to red. So a little bit of a downtrend for now, and we are still not seeing any exits on this most recent bearish signal, right? So just want to be careful, as I say, right? If we do break that 55 cents level, that's where more selling can actually happen, all right? We can see the downtrend continuing further. So yes, there we have it, guys. We have pretty much covered the 4 Singapore tech stocks that are quite popular and I get asked quite often a lot, and they are AEM, Frencken, UMS, and ISDN, right? So I would say that for now, AEM seems like the one that's a little bit more stable in terms of the uptrend. In the longer term, it still looks quite okay. Of course, in the short term, we did see selling, but it's one of those whereby, you know, the trend still looks quite okay in the longer term, and especially if we were to hold above that 390 support level, all right, there could still be a potential rebound from there as well. All right, so AEM is probably one of the strongest for now among all the tech stocks that I talk about. All right, so I hope you like this video, and if you want to find out a little bit more on the framework behind the system, or maybe how we use the system to pull out winning stocks like this, and when to get in and when to get out, especially if you like see a bearish signal, you can attend one of those free web classes which I'm still running. All right, go ahead to click on the link below the video. I'll probably place the link below. Just click on it, attend it if you have not yet attended, and that's where you can learn a little bit more on the entire trend trading strategy, all right, behind the system, and when to get in and when to get out in the stock market. All right, so this is Joey here. Thank you so much for watching. Let me know what are your thoughts on the Singapore tech stocks, right, that I've talked about. Let me know what your thoughts. Do you think there are some signs of a reversal, or want to be careful because there could be more downside? Comment below, let me know. Right, so thank you so much for watching. Hit the subscribe button if you have not yet subscribed so that you will not miss out on any videos like this, and give me a like as well. You will definitely help out the channel, and thank you so much for doing this. I'll see you in the next video. Thanks.